Mr. Kwame. Mr. Kwame, I'd like you to take your seat right behind me because I'm going to invite a few more of our friends to join you in the panel conversation. Please, a big round of applause for Mr. Pianim for me. So we're going to have a conversation, and I'm looking for not only to hear the panel, but also to hear from my audience, because I'm going to make this very interactive. And so microphones are going to be going around for input. I see some very interesting minds with us. Professor Bokwing, I see you behind your face mask. I'm looking forward to hearing your thoughts on this. And so I'm looking forward to coming to all of you to participate in the conversation. This is about Ghana. I've said this conversation is just timely. And GIZ and IMANI couldn't have partnered and come up with a better topic for the moment. And let me quickly now invite Dr. Priscilla Chumesi-Bafo to join us on the panel, as part of the panel. Please, a round of applause for her. Please take a seat there. Please, you have to join this one for me. And also joining us is Dr. Sam Mensah, is a founder and executive chairman of SEM Group. A round of applause to him. And we're expecting the Deputy Finance Minister, Dr. John Kumar, to join us very shortly. When he does, of course, we'll ask him a few questions about our microeconomic environment. And to start this off, I have one clarifying, simple yes or no question to Mr. Pianim. Mr. Pianim, so the question was, is Ghana's microeconomic environment an enabler or a hammer? On the back of what you just presented, what is your conclusion? Is it an enabler or is it a hammer?
I didn't understand the question as asking now, what is the environment now, and is it an enabler? As I said, it can be an enabler, and what we should do to make it an enabler. Currently where we are is not pretty. Prices are in the wrong direction. The level stock of debt is problematic. And the big ticket items of expenditure of government, we need to sit down all as Ghanaians and have a discussion. Because we want certain social programs, but are we ready for it to undermine? And that's why I kept on saying about steady growth. So if we are here, we are in a crisis now. So if we are in a crisis, the environment cannot be said to be an enabler. For there are external shocks. I've emphasized external shocks. What is happening now is maybe largely the external shock, the pandemic, the uncertainties in the global market, which have shot commodity petroleum prices and other prices up. So the environment, we should have been in a position where we can protect ourselves from these shocks. So you ask me, the environment, is it an enabler now? If I was an investor, will I be rushing into Ghana to put my money in? Mm-hmm. Probably I'll think again.
Okay, so I guess we get the answer there. Let me now bring in Dr. Chumesi-Bafo. Doc, what's your own broad, general take on the question first, before I ask any follow-up? Because I want you to, lay your own foundation. The question is a pretty simple one. Where would you pitch your tent?
Thank you very much, Evans. I believe that the economy of Ghana does relatively well in terms of growth, like Mr. Pianim indicated. But there are inherent challenges in the economy based on the fact that our exports basket is not too diversified, and that means that it exposes us to a lot of vulnerabilities on the international market, international prices, shocks on the world market. So inherently, you find that when all things are equal, the economy does well, but the slightest shock because we don't have a lot of resilience. And why is that? The bottom line has been on the fiscal side, we tend to spend more than we generate, so we tend to accumulate a lot of budget deficits, which feeds into high government debt. At the moment, we are doing over 80% to GDP. And that has a lot of implications on a lot of the other things that investors are looking out for. So indeed, I cannot say that as a hammer. Every policymaker and every Ghanaian wants the environment to be enabling, because we need the investment for employment generation. Our economy is growing, our population is quite young. So in that sense, I believe that policymakers ought to get to work to make the environment an enabler. But as a stance, inflation rates, exchange rates, and all the other, in addition to regulation and others, it is not too welcoming to investments.
Okay, so I see you leaning more towards, if you have a scale, you're leaning more towards it being a hammer than an enabler. But just on the fundamentals of the question again, said for me, Mr. Kwame Pianim laid out his definitions. What for you, if you're considering the macroeconomic environment, will be the factors that will be very important for an investor, for example? What for you will be those key factors? Still with you, Dr. Chubesi, but before I come to so what for you will be the key factors that will, for a macroeconomy of Ghana, will be key for an investor who may want to put his money, his capital into this economy?
So for starters, a good growth trajectory, it's an indicator for prospects, and that is something that Ghana doesn't seem to struggle with. The sources of the growth has been the issue. So growth is the country growing, income levels rising middle class. It offers an opportunity. Obviously, investors need some level of security, which we seem to have in the sub-region, in terms of political stability. In terms of the exchange rates and the inflation, those are key indicators, because it tends to erode working capital of investment. And also looking at the cost of credit, for example. So you want to look at credits in terms of how much people can borrow within the domestic economy. When you look at some of those numbers and you compare Ghana to its contemporaries, you find that Ghana seems to have a very high cost of credit. And when you trade, you track the data to, for example, credit to the private sector, you see that credit to the private sector is very low in the country because the cost of credit is high. Mr. Pianim indicated, for example, when government borrows, government is the safest borrower for you to lend your money to. So when government borrows on the financial market at a higher rate, cost of credit, it's high because nobody else can borrow below that rate. So all these are key indicators that send a signal. And for investors, principally, cost of capital is a key indicator because it influences the rate of return of any investment that is made. And within all that, the stability plays a role, and all the other indicators in terms of, for example, recently, Ghana is the Secretariat of AFTA, for example. It offers some opportunity, which opens the country up for foreign direct investment. I am keen towards foreign direct investment, but I believe that we also need to also look at domestic investment as well, because all these environments, they all play a role when it comes to infrastructure that is needed to support the investment. Is it there? Those are some of the issues that I believe needs to be addressed.
Fantastic. Let me bring in Dr. Mensah now. Dr. Mensah, you are actually doing it, right? I mean, so from that point of view, and you representing some group and what you do, you look at the question, and where do you lean towards, hammer and enabler?
Well, I think that the macroeconomic environment has been an enabler in the past. Unfortunately, from time to time, we've gone off track. And therefore, during those periods, it has been more of a hammer than an enabler. So the challenge that we have is how to maintain consistency in our macroeconomic environment. I think most of the policies that we implement tend to be time inconsistent. So time inconsistency simply means that the government sets a policy or the minister sets a policy, but his successor has the total discretion to roll back the policy or eliminate the policy. So we say the policy is at time inconsistent. And I think that it's been a major problem. We have to, in addition to taking macroeconomic decisions, we have to look at our institutions of economic governance so that we can maintain some consistency or minimize time inconsistency. Example, we have, for example, the Fiscal Council, which was set up not too long ago, maybe 2018, something like that. Okay, so we've got a Fiscal Council, but if you look at how it was set up and how it fits in with the economic governance of the country, it is not particularly time consistent. Its term is coterminous with the term of the president. It is an advisor to the president. It is not able to serve as a major restraint on budget spending. So that is one example of a governance area that needs reform. And we can talk about many others. National Development Planning Committee, Commission, it's not time consistent. So if we can just improve the time consistency of our macroeconomic management, I think it will be a significant enabler to investment in Ghana.
Okay, so that leads me to the question, because I think you touched on something I want to explore a bit more, and I'll come to you, Dr. Chumisi, on this. I mean, how you make the macroeconomic environment attractive to both foreign and domestic capital. I think he touched on something very critical. Looking at institutions of economic governance, I think he puts it, making it, because as he said, these institutions have become so political that it almost, as he suggests with the Fiscal Council, once one government leaves, I mean, in fact, if you look at the Fiscal Council, it was suggested in opposition as a solution to government overborrowing from the central bank and blowing a fiscal deficit out of the water. And so then I remember very well sitting in a lecture by Dr. Baumia where he first proposes this as one of the ways of ensuring fiscal discipline. So you don't leave it to the government itself. You have some headmaster holding a cane checking their act. I mean, so just from the way that was even mooted and then became a campaign promise and has been implemented, you wonder, you're right, if this government goes, whether the next government that comes, if it's not MPP, whether they will continue, right? So that's one of the things I want to explore a bit more, Dr. Chumisi Bafo. Dr. Pianim has been kind enough to lay it to what the problems are. You've touched on some. How do we make this? We are not only attracting domestic capital. Foreign capital is key. Now we know the problem. We can't even go to the international markets anymore. Well, what do we need to do to be more attractive to both capital, both coming from locally and from international as well?
I believe that the foundation for most of the problems we have has been on the fiscal side. So when you look at domestic revenue mobilization, we are not able to generate enough resources domestically. Currently, we are doing around 14% to GDP, tax to GDP ratio. And so, but on the expenditure side, we tend to have moved towards a very quote and unquote socialist kind of governance where we want to do a lot more on the social front, which is good to try to attend to the needs of the poor. But when you look at countries that are able to do that sustainably are the ones that have very high tax to GDP ratio because they generate enough resources to be able to do that. What we tend to do is that we are quite heavy on the expenditure side but unable to generate. And how have we financed that? We have financed that when you look through the books, you see that we financed that through consistent borrowing on the international market. Because Ghana is on the horizon in terms of growth, the prospects are great. But this is not sustainable, and clearly recent downgrade of the economy and all the issues, in addition to the external adverse shocks that hit us, which, I mean, most of these shocks, sometimes you are not able to anticipate it. And given the very low resilience of the economy, we find what we find. So indeed, we need to be able to generate enough resources domestically. And when you look at trends, happenings lately, you find that, for example, the passage of the e-levy bill has led to some positive signal on the international scene in terms of investors, because people were not quite certain of how we dig ourselves out of this very deep hole we find.
Very interesting. I need to ask a quick follow-up on that. My question was on attracting foreign and local capital. On the e-levy question, which of these two brackets of capital will find it more attractive?
Indeed, if you are putting your money in an economy, as a foreigner, you always want to make sure that you can take your money back whenever you want to leave. And so in that sense, you are looking at the balance of a payment aspect. You are looking at government reserves. You are looking at the performance of the exchange rate. So that is critical. And domestic revenue mobilization is essential in feeding into that. And so you need some stability on the macro environment. And if government budgets, it's in a disarray, and government is financing it through a whole lot of other ways, it has implications on the exchange rate. It has implications on inflation as well. And people are looking at the value of their capital. So you do not want to put $10,000 in Ghana and then in 5 years it is worth $5,000. That is not what investors, whether domestically or foreign, want. So indeed, we need the fundamentals. And at the basic is that we need to diversify the economy and make sure that we generate enough resources and maybe pull the brakes on the social expenditure a bit, so that we are able to amass enough resources to invest in the infrastructure and capital resources that we need.
Very interesting. Now, if I may sum up your points on how to improve this, I think fundamentally you are saying raise enough revenue, but most importantly, spend what you raise.
Definitely.
Spend what you earn, not above what you earn. I think it's between us says cut your cloth according to size. That's what you're agreeing with.
Yes, that is.
First of all, you say we are not raising enough.
Yes.
But whilst we're not raising, we're also spending beyond what we are raising. Okay.
So spending beyond what we are raising, I'm a bit careful that if the expenditure was moving into capital expenditure, then as a developing country, we need it, because it means that it will propel the growth. Yeah. But if the expenditure is in the area of consumption, then indeed...
it tends to be the reality, right? It tends to be the reality.
Sure.
That's the reality. Okay, great. So that's a point. Mr. Pianim, let me come back to you on that question. You lay for us the challenge and what we need to do. Do you agree with the points that have been made about how we make the climate attractive to foreign capital? I think she touches on the exchange rate problem. And you had a fantastic example of how you say for 10 years, you're hoping to buy a house. And by the time the money was ready, you could only buy a glass of wine. That is a big problem for capital, right? Either foreign capital or domestic capital. It's a big problem. You don't know 10 years down the line what it's going to be worth. So I've had friends tell me recently that it's better you buy the dollar-denominated bonds, because if you do the local CD bonds, that's what's going to happen to you in 5 years when the bond is mature. I mean, what can be done to fix that problem?
First and foremost, what is important is to get the economy growing. If you talk about raising revenue, first of all, it is easier to raise revenue when your economy is robust and growing. You need also to take a look at the expenditure pattern. Countries like Ghana, what percentage of tax revenue is being spent? What percentage of GDP is government expenditure? Maybe our government structure is too big. Maybe the time has come for the NPP, the governing party, to do what it says it wants to do, let us do a tender and sell all the non-critical state-owned enterprises that are involved in production and distribution of goods and services, so that the government sector becomes small. And with a smaller government sector, maybe you don't need more than 15%, 14% of GDP as tax revenue to cover that. And I think very important is that every Ghanaian should view an entrepreneur as a national asset, so that when one party comes and another party comes, you are not going to sack people from being businessmen because they belong to another party. I think that is very, very critical, that all businessmen be respected, irrespective of who is coming or who is running the economy. You know, people tend to emphasize the fact that our tax revenue is too low. It's problematic. And people will even give figures that only 1 or 2 million Ghanaians are paying taxes. I don't know what they define as paying taxes. Go through the structure of our tax revenue. VAT, every Ghanaian pays VAT. If you are talking about, and when they do that, they even forget that cocoa farmers who pay 25% of their turnover are not being regarded as taxpayers. But they are paying about 25%, 30% of their turnover, that the FOB price. So I think we go back, take a look at the expenditure. To me, when people are saying that, you know, is a tax revenue that is too low, lower than what people like us are collecting, it's like a head of family who has a funeral and says the donations didn't reach where we expected it to be. Cut your coat according to your cloth. If we do that, and before we do any of these big items, let us project it, estimate it correctly. What is it going to cost us? Maybe we have too many districts. Cut and let us have viable districts. Regions, maybe we have too many. So if we want steady, smooth growth, which is the way we want to go, because a lot of these crises will always come, 3 years, 4 years. If we don't do that, most investors who come to Ghana, they are looking to 3, 5 years to be able to make their return. And most investors, foreign investors, if they make a profit, a lot of them, if they look at the economy as being sustainable and going, they will be multiplying their investment. Otherwise, the first quarter that they make a profit, they externalize it. They take it outside. Because if you leave, I was one involved in a company, we had about $30 million equivalent in reserves in the company. Then the city turned around, and within 2 years, we are lost $25 million. It would have been better if we had externalized it as profits and dividends and then brought it back. So when your price price relativity is going wrong, and you are like a country like Ghana, then for foreign investors, when they are in, they will take their profits out. Every year they will declare dividends. They will not leave it here. Ghanaians will leave it here, but every year the capital they have to invest will be going down and down and down. When we started fish farming, the price was 3.5 cedis per kilo. The cedi was equivalent to the dollar. Now we are trying to sell at about 25 cedis per kilo. That's still around $3. But so it's very difficult when you're a businessman. and prices are unstable.
Yeah. Dr. Sam, let me bring you in. Dr. Sam, let me bring you in here. As an investor, I mean, over the years, many governments have tried through a combination of fiscal and monetary policies to try and make the environment a bit more attractive to investors. I mean, how has all this combined to improving your confidence level, for example, in the Ghanaian economy as an investor? Recently, we've seen again, a combination of monetary and fiscal policy adjustments, right? The Bank of Ghana has, significantly increased the policy rate. The finance minister then followed up with a host of fiscal interventions, cutting discretionary spending by a total of 30%, et cetera, et cetera, et cetera. Has any of these in the past combined to effectively improve the climate for you?
Yes, some of it has, but I think that the challenges we have with our macroeconomic environment are the fact that the causes are usually structural. We have inbuilt into the structure, we have it's a structural deficit, for example, is built into the way our expenditures and revenues are shaped, are structured. So we need to find a way. I mentioned economic governance before. We need to find a way of improving the way we go about managing our resources in the macroeconomy. For example, how do you bring down the deficit or go on a deficit reduction trajectory or a debt reduction trajectory if you cannot get the opposition to support what you're doing? So we need a plan that can be bought into by all sides of the political divide, which is very difficult unless we start to look seriously at our constitution and how it is leading us to extreme levels of partisanship, which makes it difficult for us to have a national plan for maintaining a consistent macroeconomy. So I would like to ask for a more political economy perspective as opposed to just focusing on the economic policies of the government.
Okay, very interesting intervention. I want to bring my audience in now into the conversation. I see the room is packed, and this is a very interesting one. If you're an investor here, I really want to hear your personal experience with our microeconomic environment, how is either encouraging you to put your money in or discouraging you to put take your money out. I want to hear that story. If you have a question or a contribution, we're going to get the microphones going around. Mention your name, where you're coming from, and let's hear your take on this matter. I want to, whilst we wait for that, do you have any interventions? Do you have any interventions? If so, the microphone will go around. Just let me see by hand, and the microphone will come to you. So whilst we have this conversation, I want to put, Dr. Chumesi Bafo, I want to sort of put this in the context of what is now currently happening. I guess IMANI would have chosen this topic out of the blue. There must have been something happening recently that triggered it, obviously. We've seen the interventions that both the Bank of Ghana and the finance ministers try to do to sort of reassure investors, both local and international investors. And you wonder, the raft of measures that were announced recently, trying to fix the macroeconomic challenges, it shows that it's possible, right? We're trying to cut our cloth now, according to, as Mr. Pianim said, according to our size. And you wonder, why haven't we done this before? In 2014, 2015, we did same. Homegrown solutions didn't exactly work out, and so we picked the call and called the IMF to come and help. We seem to be doing same. This cycle seems to be repeating itself. We seem to know how to make this macroeconomic environment attractive to investors, but we seem not to do it until there's a crisis, and then we attempt to do it. You've seen the recent attempt again. Has it convinced you? Is it something that, first of all, is it convinced? Second, is it sustainable? If it's not, how do you make that sustainable? For example, it doesn't become only a crisis intervention as it was in 2014, 2015, but becomes our way of living going forward.
Yes, I think that, Evans, it's not like we don't know what to do. Policymakers do not know what to do. But I believe that the political will to stay on course and do what is expected is not what is what is lacking most at times. So you find that when you look at the trajectory of Ghana's performance over time, when Ghana is under, for example, an IMF intervention, I mean, you find that we are stellar students. The economy performs better. Everything goes on point because we are operating under conditionalities, right? But the moment we exit and then we relax and then politics comes to play in the midst of a lot of promises, ambitious promises on the part of politicians, we overspend and then we find ourselves in a similar difficulty. So for me, I am happy that at least we know that there is a solution, there is a way we need to operate, and that is what policymakers have used to send a signal. So for instance, when you look at the policies from by the Bank of Ghana, you find that indeed these are times that inflation is on the rise, not only in Ghana but globally. You find that a lot of the Federal Reserves have increased interest rate. That also poses a threat to capital flight because the economies are way resilient and better. So foreign investors would want to go out of the Ghanaian economy if inflation is high, for example. Net returns to investment tends to be negative. So the Bank of Ghana had to come in to pick up the policy rate so that at least we can get some positive returns on domestic assets.
So it's positive and it's possible.
Definitely.
How do you sustain that? How do you make that our way of life? You want to contribute, Dr. Mensah, and then I'll bring my audience in. I have with me Professor Daka with the AGI who has a contribution. I'll take that. But you quickly, very quick, 1 minute. How do you make that sustainable?
I made the point before about maintaining consistency in our policy making. Very often we go into a mode where we do a lot of reform for about a couple of years. The environment is stable, and then suddenly there's a shock, and we go back to where we were before. So how do we, I think the key question is, how do we introduce more stability, consistency into our macroeconomic management? Because businessmen, whether they are outside or here, are always looking at the long term. And it's not a very friendly environment if every so often there's a crisis and you have to roll back what you achieved. So I think that we have to look at our institutions, look at how they can promote more and more macroeconomic management consistency. We have some of the elements already there. We have to tighten them up. National Development Planning Committee, for example, is there. We haven't really used it. But I think the framers of the Constitution were looking ahead, looking at maintaining consistency over time, which is why they created those institutions. But we haven't really used them. So I think that there's room to do better.
Kofi Bento has a microphone.
Okay. So, thank you. The topic is about whether the macro situation is an enabler or a hammer. It's binary. It's either it's helping us or it's not helping us. And I have a feeling that our speakers are being politically correct. So we are going to try and push it. I'm hoping that each one of you will tell me if you believe it's a hammer, one main reason why it is a hammer, why it's killing us. And if you believe it's an enabler, one main reason. The reason is that if it's a hammer and we can identify something, then we know what to do to deal with it. And if it's an enabler, we know what to do to improve it. So if each of you can say something about that. And then I need your comment on this. You just mentioned, Madam Priscilla just mentioned IMF. That dynamic should tell us something. Whenever we are under what we call adult supervision, we do well. When it's off, we don't do well. And I think the reason is because the risk and reward, the political risk and reward dynamic, which is also connected to our constitution, makes it impossible for the National Development Planning Commission to be effective, makes it totally impossible for a fiscal council to ever be effective. There is no reason, no reward, no incentive for any politician to cede that power. And I think as long as that remains, we will never, the word is never, and sorry, but in IMANI we push the limits. And it's important because for almost 30 years, we've run this constitution, and it's not for lack of knowing what to do, but the fact that that person sitting there has the power to do what they have to do, and there is no risk to it, means they will do it until you have adult supervision. So I think that we should drill down to that and maybe figure out how we can get out of that. So first, if you think it's a hammer, one thing so we can do more of that, do less of that. If it's an enabler, one thing so we can do more of that. And then what is your comment about this one?
Okay, so I'll come to take that question. Dr. Adake with AGI has an intervention I'd like to take as well. Yes? Can we take that? Oh, okay, great, fantastic. Oh, you I was told you have one. Okay, but let me ask you then. I mean, Association of Ghana Industries, right? This is a conversation about you are the domestic investors, so to speak. I mean, you've seen the conversation. I guess let's start with Bentil's question. Where do you stand on it? Is environment a hammer for you? It has been an enabler for your members.
Well, when you put the two together, one would say it's a mixed basket. An enabler.
You're also being neutral, you know. No, everybody's trying not to.
May I finish this?
Okay.
An enabler sometimes to the foreign investor who does portfolio investments when the interest rates or policy rates are high, and therefore they could cash in, and then they check out. And when they check out, it becomes a hammer to the local investor who puts his money directly into productive sectors. And therefore, then we bear the brunt once the portfolio investors check out. So it depends. So you cannot say straightly hammer.
But for the Ghanaian industry person,
for the Ghanaian industry person,
which you represent,
depending on
largely,
the sector,
where is it swinging to? Where is the pendulum swinging?
Oh, for a Ghanaian investor who's really in the domestic terrain, and when a portfolio investor checks out and the city misbehaves, and then that of the various policy rates are jacked up, automatically it becomes a hammer on the Ghanaian investor.
So it is a hammer for you largely.
Well, I have explained my position.
So to the follow-up question then, if that is the experience, can you name one thing that you believe can be done one thing we should do less of?
Two things.
To help prevent that from continuing being a hammer for you?
And I guess that is where we could find one in the area of the the monetary policy interventions. And we keep saying now and again that anytime the governor reads out his reports, we even seek to find the minutes of the reports. Though the data comes out, the minutes will give you further descriptions and narratives of the various commissioners, point on various activities that is happening in the economy. And you find it there very clearly. But per their mandate, they do not release the minutes, which we seek to find because we do not sit on the institutional board. Then you find the data that comes forth. And you see in that there's advice to the fiscal section that, listen, such interventions, and we keep repeating it, the food basket, the non-food basket like the fuel, and that of construction, you see these ones move the inflationary rates per the basket. So why don't you do specific interventions in the agrarian business? And if you do the agrarian interventions, our next point is the National Planning Committee and the Monitoring and Evaluation Unit of Government.
So you're suggesting target monetary policy?
No, target interventions.
So general
in the basket.
Okay.
Because you see, you need to identify the drivers of inflation. And in the basket, food basket is one of the key that the governor now and again repeats that are his concern. So you will see in 2018, 2019, they did a deliberate intervention in the agri sector until the COVID. However, in that space, that is why we went very hard on the subject matter of the benchmark discount values and its effect on our various operations. We believe that as much as they had a good intention to reverse the impact of the food basket on the inflationary rate, the one thing that was missed was the monitoring aspect to see where to get the feedback and correct the wrongs and perfect their ways. Some interventions that came along that line was the concern of warehousing, because in the initial promises, you realized there was no warehousing. So they brought in the warehousing to complement the food, plenty for food and jobs. And in that value chain, you realize that they were getting some feedback between 2018, 2019. However, when they messed it up and they didn't realize that the intervention of the discount values exposed the manufacturers and the local players, most of the outputs, like the paddies, rice paddy, the cereals that came out from the north, were all being exported at a discount to neighboring countries. So all the 3 billion intervention in the fertilizer went down the drain. So it's a monitoring, evaluation, and that is why the planning unit of government is very critical to tie its activities to that of the fiscal unit of the Ministry of Finance, so that there can be coherent activities and coordination. Okay. So we believe that should be looked at carefully.
Okay.
And one clear intervention that we believe that was announced that may do us good is the role of the SOEs and their spending. And I think the finance minister stated it recently. Thank you.
Okay, thank you very much. And Mr. Pianim had a very interesting suggestion about the SOE. He says, I think you say we should sell some of them. Those that are involved in the production of goods and services, we should sell some of the SOEs. We should sell all the SOEs.
Not all SOEs.
No. Okay.
Infrastructure.
Do you want the microphone?
There are certain strategic sectors like water, electricity, the ports, harbors. These are national, and these are not assets that we want foreigners to run. Okay. So I believe that food, production and distribution, government should not be in it.
Okay.
And it will make the private sector also strong, dynamic.
Okay, so that is part of the cost-cutting measures to cut your costs and raise more revenue. Yeah. Take out those burdens on the state, and then you could free up capital for something else that could attract investors. And thankfully, the Deputy Finance Minister is here with me, Dr. John Kuma. And Doc, I'm going to throw in the deep end, because as part of the conversation that we haven't touched on that I want to touch on, because you're dealing with the macroeconomic environment and how is either a hammer or an enabler. I guess I should start that basic question with you. From the finance ministry point of view, let me guess the answer. You say it is an enabler. Prove me wrong. It is?
No, it is.
Okay. So if it is, what is it that you're doing that convinces you that it is? And how do we make that, how do we sustain that over the next? So one of the things we've talked about before you came is that there are some good policy interventions over the years, but they haven't been sustainable. They seem to just change with the government. So you started by saying you have a macroeconomic environment that is an enabler. If that is true, what are the factors that support that, and how do you make that sustainable going forward?
Okay, thank you very much, Evans. Let me sincerely apologize for my lateness. Today, Parliament is rising. It's our last day in Parliament, and we needed to be there to approve some final policies and stuff, so we are very sorry for the late arrival. I will say that the macro environment is supposed to be an enabler. I won't say it's an enabler.
Oh, but I asked earlier, you were very categorical.
Well, because it wasn't my turn yet. But as government, we think that we have to position it, and in our mind, we are positioning to become an enabler. As to the results of it being an effective enabler for businesses and the private sector to thrive, that is why we are here in programs like this, to take the feedback so that we know where to improve and where to take the feedback and make it useful. I cannot set the questions and mark it myself. That would be giving myself 100%. So yes, I in my mind, or the ministry or government in our mind, believe that we are positioning the macro environment to enable private sector growth.
How are you doing that?
Yes, so we are doing that through a number of fiscal and monetary policies that we put out every day. And sometimes some of the factors may be out of control of government. Of course, we all know how external factors like what we are currently dealing with, like COVID, came in to throw away a lot of our economic indicators, which we were doing well. If you check the GDP growth from 2017, 2018, 2019, clearly we were on the path of growth. And any economy that grows consistently on average of 7% per annum means that we were doing something right. And so I would say that we had inflation below 10%, and we even passed the Fiscal Responsibility Act to ensure that as a government, our deficit target do not exceed 5% per annum in every year, and we must also post a positive primary balance. All these were good economic indicators that were to ensure that we create wealth, we empower the private sector to take advantage of this. Of course, it led to reduced interest rates because even the central bank policy rate came down as much as, I think, 13 or 13.5%. But unfortunately, we have seen the reverse because of what I'm talking about since COVID came. And it's not only a Ghana situation. If you check either in our sub-region or on the African continent or even at the global level, almost every economy has seen this shock. For the first time, you are seeing inflation levels even in places like the US or Europe beyond 30 years since they ever had those levels. So clearly, we have been hit by external factors, and as government, we needed to respond. So if you have observed, even in this year, when we presented the 2022 budget, and we sought to bring down our deficit, and also try to come up with policies that will help the economy rebound out of COVID, you realize that we have tried to even revise not just our revenues, but even expenditure targets. Government has announced that because revenue measures were delaying, like the delay in passing the e-levy, we revised expenditures, especially discretionary expenditures, by 30%. Government is cutting a lot of other, let me say, allowances or support to appointees like fuel coupons and extra interventions to make sure that we are able. There is even moratorium on importation of vehicles, especially, four-wheel or 4x4 vehicles into the country. So we are seeking to tighten the expenditure side, and at the same time, we are looking at how we can expand revenue. In fact, last year, the GRA was able to meet the revenue target of 57 billion and even had a surplus of about 200 million extra. This year, the target is to do about 80 billion cedis. But because maybe we had a little bit delay in passing the e-levy, there may be a little difficulty, but it's still possible to even achieve the target for the year. So all these are interventions that government is putting in place beyond even the fiscal interventions. BOG too has also intervened to address the inflation issues. Now we have raised the policy rate up to 17%. And then also the bank reserve rate has also been increased, and all that. All these are interventions that is seeking to mop up the extra liquidity which is causing the inflation in the system. And we believe once we are able to target inflation and ensure that the exchange rate stability is also achieved. And I'm happy to observe that, especially after Parliament was able to pass the e-levy, we are gradually seeing a close on the spread of Ghana bonds, and a lot of pressure on the dollar is gradually also slowing down. So I believe that our interventions and government policies is helping to create that enabling environment which makes it possible for businesses and especially the private sector to do well.
So key question, I was listing interventions. The only pre-crisis, and I'm talking about COVID here, measure was the Fiscal Responsibility Act you mentioned. The rest of it had all been inspired by the crisis we are in. And you seem to suggest that it is the COVID and post-COVID interventions, fiscal intervention, that seem to be yielding these positive outcomes. If that's the case, the next question was, how do you plan to sustain it? How do you ensure that this becomes our way of living, so that it doesn't end once the crisis goes away, as we saw in 2014, 2015. Once the crisis disappeared, we went back to doing the same old things. What is government doing now so that these positive results you claim you are getting because of these interventions continue, in the long term?
Yes, so one of the key interventions was the Fiscal Responsibility Act, which required that in every fiscal year, government doesn't go beyond 5% of deficit expenditures. And then also to post a positive primary balance. And unfortunately, when COVID came, we needed to suspend the Fiscal Responsibility Act. And now, if you look at the government budgeting strategy, by 2024, we should be able to hit back to the 5% fiscal deficit rate. And even this year, in 2022, government is seeking to reduce to 7.4%, and also to post a positive primary balance from this year, 2022. So I strongly believe that gradually we are going back to the stable environment that we knew that Ghana economy was performing. And how do we achieve or sustain that? And I believe that we are sustaining that by the laws. Once we have an act passed, you can't go beyond a certain threshold. It will put governments in check, that there are certain fiscal targets that you are not allowed to exceed within the fiscal year. I think those acts will help check the government. Mr.
Pianim, a quick question to you, and I'll come to the audience again. I see Professor Bokwing. I would like your intervention and others as we wrap up. The rising public debt. We haven't. You touched on that briefly, but I want to expand on that for me. How much of a challenge is that to the business investment climate? I mean, the debt is growing. It's become unsustainable. We have crossed 80% to GDP, and nobody knows when it's gonna come back within the ranges that we can have fiscal space to do more. How much of a problem has that been for the climate, the investment climate?
When I agreed to participate in this discussion, I thought it was a discussion to say effectively, what are we going to do? What are we going to do to strengthen the macroeconomic environment to attract investment and to let the economy grow in a sustainable manner? I did not take it as being what is the current macroeconomic environment. That's not an interesting proposition. The interesting proposition is, what can we do? And I think that when you take a lot of the policies that have been put in place, what I said, and I thought my main takeaway is that we should not waste this crisis. We should take this crisis and make use of it. How do we make use of it? Governments do not spend because they like to spend. Governments spend in response to the exaggerated entitlement mentality of the average Ghanaian. That's what we are responding to. And if the Ghanaian knows that by responding to these our demands, we are making the steady growth of the economy unsustainable, which means we hit and we are coming back, then becomes a problem. The Fiscal Council was created in order to demonstrate to the IMF and those who were saying Ghana should not get out of a program that we can, and we have the people to help us, guide us. So we don't need any adult supervision. That was the idea that was being thrown out. And we can. But you see, if we were to say that the Fiscal Council is given the power to issue what the Catholics call a nihil obstat. That is, government says, this is the project we are going to build 300 public lavatories. Then the Minister of Finance should do its work in saying this is the cost, the capital cost, and this is the recurrent cost. And the thing about recurrent cost is that if you spend 1 cedi to do the project, you need 1.5, 3 cedis annually to maintain and operate it. So your recurrent cost burden is going like that. If Minister of Finance then does all those projections, the cost-benefit analysis, then it goes to the Fiscal Council, and then the Fiscal Council will issue a nihil obstat that we have no problem with your doing that before Parliament can pass it. The same with the National Development Planning Commission. To me, it doesn't make sense when we have democratic parties to say that I come into power now and say I'm bound to be doing what my predecessor, whom I thought was doing wrong, that's why I fought to remove him, and I should continue what he was doing. The National Development Planning Commission should give us broad outlines. That is from the NPP perspective, because we live in the private sector. From those who believe that they are social democrats or whatever, to them it should be, serious planning for them to be able to move. But see, finally, when the government changed, and we made the tenure of the National Development Planning Council in such a way that it extends beyond the life of the presidency. But the same members rushed to the government to resign for the government, and it took us about a year to empanel. It doesn't make sense. We as Ghanaians should take the responsibility. I'm elected onto the National Development Planning Council. A new government has come in. I don't care what you say, I'm going to sit there. And that's what we should do. But we all do it and say the Constitution, there's nothing wrong with the Constitution. What is wrong is us, Ghanaians. They say we have structural imbalances between expenditure and revenue. Let's sit down and say, how much are we getting? And I suggested things like cyclical budgeting. I also warned that when you are poor, putting aside savings may not make sense. But this is the debate for us Ghanaians to say that it's like buying insurance. IMF is an insurance. It should not be that there's any stigma or shame going to the IMF. We put our money there and say that when we get external shocks or even domestic shocks like wildfires, we'll come to you and you give us some of our money to ease the pain that we have to inflict. It's not, we have a proverb in my village, say the vulture. The vulture doesn't build a nest. When the rain comes, the vulture says, oh, tomorrow I'll build a nest. Then the sun starts shining, forgets about it. Of course, the sun will shine, but the rain will come. So we should be able to say, the reserve that were built, we should have rules about it. You cannot use more than maybe 30% of the reserves for fighting any. But we can make the rules. Will we go by the rules? That's the problem.
Okay, so that's thank you very much. I'm going to take a bit more from my audience now in the next 15 minutes and come back to wrap up. Yes, I see a hand in the microphone there. Professor Bopwing also will but yes, Mr. Thompson.
Thank you very much. My name is Mensa Thompson. I'm with ASEPA. My question goes to the Honorable Deputy Minister for Finance. First, we all know that the macro environment includes fiscal reforms. And anytime we've heard of fiscal reforms in this country, it has always been the introduction of new taxes. We've seen the e-levy bill passed into law, and all sort of accolades being given to the e-levy. And but with all indications, the e-levy looks like a contractionary fiscal policy. I want to find out, Honorable Minister, if the Ministry of Finance, before the passage of this e-levy bill, have modeled out the impact of the e-levy on the macro indicators such as interest rate, unemployment, and inflation, if they have modeled out and find out how the e-levy is going to impact on these macro indicators, whether it's going to be positive or it's negative, before they hang this around our neck. The second question has to do with the expenditure cuts. And I want to find out if the expenditure cuts that was announced post-PDRC, if they are not merely cosmetic. Because we do know where the real problems are. We do know where the real problems are. We've seen the huge burden of the wage bill. But over time, in the last 5 years, we've seen state entities like NPA, GMPC, Ghana Gas, SNIT, who previously did not even have deputies. Now some have 2 or 3 deputies. And all these are contributing to the wage bill. How are we pruning the wage bill to ensure that we create enough fiscal space to be able to achieve the fiscal consolidation which some of this discussion aims at addressing? Thank you.
Okay, thank you very much. He's noted the questions. Prof. Bokpo, you want to, I see you nodding your head to something. Okay.
Okay.
And then I'll come to, if you may stand for me, because we want to, this is on live television so that we see you.
Yes.
Please stand for me.
Oh.
Thank you very much. Yes.
Yeah, thank you very much. Mine will be a suggestion, and in line with what Mr. Pianim talked about, that we should be living here with some concrete things that we want government to do. And I think the first one I would want to lean towards is the Fiscal Council. And I associate with myself with the comment of the MPP when they were in opposition, that the Fiscal Council should be independent. And we need to go back to that. So, and I agree with Dr. Chumesi that under the IMF, there were certain macro targets that were in line, because as Mr. Bentis talked about, we're under adult supervision. So Ghana is so young that without adult supervision, we are more prone to misbehaving than doing the right thing. So if that is the case, and probably the reason we've been to the IMF 16 times, and with the April 2020 program now counted at 17 times, then how do we create a national institutional restraint that can perform a similar function like the IMF or our headmasters? If we fail to do that, then we will be unique to expect a different outcome by doing the same thing. And that is why practically since independence, every 3 years and some few months, we've had to turn to the IMF. And when you examine the data, you will find that the problems are structural, they reoccur practically every 3 years. So, so a good way to do that, and if you look at the political environment and how polarized it is, we need this national institutional restraint as a bridge between the two main political parties in proper advocacy and getting Ghanaians along. We need to do that because there are certain things that government itself will struggle to communicate to Ghanaians. Okay, but the Fiscal Council can do that, particularly with some of the social programs that are expensively arranged. And I'm saying so because if you look at what happens with Maslow, GD, GDA, and all those things, if you look at the budgetary allocations to those areas, without proper value for money, then you realize that a lot of money is going down the drain that we should be looking at. So let's look at making the Fiscal Council.
So I was going to ask, let's drill down a bit on that. How do you make them independent? Is it in the appointment of those who are there?
Let's look at the Act.
Okay. Specifically, what aspects? So tenure, appointment, what specifically
tenure,
what?
Appointment, reporting, function, budget independence, both theoretically and operationally. We need to do that. Let's not make it advisory. Too many people are advising the president already, right? So let's make the Fiscal Council independent. Let's carved out a certain budgetary arrangement that makes them operationally independent, then they can even do a lot of the fiscal impact analysis of bills and all of that that goes to Parliament and feed Ghanaians. We need that. If we fail to do that, then the other thing is that, you see, they talked about the Fiscal Responsibility Act. That failed from the day it was passed.
Why?
And I'll tell you why. Without full disclosure and transparency, under the current regime, the Fiscal Responsibility Act could not deliver what it was intended. Because from 2018, we knew that the fiscal deficit was more than the 5% as the Fiscal Responsibility Act talked about. And the reason government complied with the Fiscal Responsibility Act was to treat the energy and the financial sector cleanup costs as outlier. When you include it, the deficit was above the 5% threshold in the Fiscal Responsibility Act. So you realize that even before COVID came, the vulnerability was there. COVID only made it what it's supposed to be, and the rest of them. So that is how we look at it. Now, when we talk about the deficit, right, a good way that we mess up the issue is that we have the central deficit that goes through the budget. So as we are counting that, there are other debts that are accumulated from state-owned enterprises that ultimately government have to what? Take it on board. So this works well when we are able to create that institutional arrangement that requires greater disclosure and transparency that enables all of us to have a broader perspective on all of this. Then the other thing is the winner takes all. The winner takes all is not only between the political parties, but it's also between the government and the citizens, where they feel that once we get power, we are able to do anything that we want to do. And I think that itself is not helpful. If you look at the macro environment right now, the last point, it does not enable long-term capital to come in here. Because with macroeconomic instability, people will learn to learn short, benefit from that, and reprice and whatever they want to do and get away with it. So what it means is that projects that have shorter payback period is what investors would want to put their money in. And all of that contribute to higher prices. So to have the shorter payback period, then it means that the price must be what? Must be high, because that is what they are after. So then the other bit is the predictability. Every investor wants relative stability and predictability. Once you deny them that, then it's going to be difficult. All of that may crystallize in risk. And when the risk is high, they only come in when the adjusted risk return is what? Is higher. And that is what plays out. And that capital does not lend to long-term growth and development. Thank you.
Thank you. A few suggestions that I will take. Let me start with you, Dr. Kuma. On that, first of all, do you agree with the suggestion? I think everybody has said that. I mean, Dr. Mensah was first to say fiscal council, strengthening the institutional economic governance, framework. Do you agree that we should make it independent, the fiscal council?
Yes, I agree to such suggestions, but I thought it was already independent. Having looked at the advisory, okay. So you are maybe... Yes, I will check on that. Maybe you are asking to give it more power in terms of its decision and influence.
He was specific on tenure, security of tenure.
Yes.
The appointments. And then, of course, you've added, making it a bit more powerful and having a bit more teeth.
I agree somehow with Mr.
Pianim.
It's not always about setting up institutions or crafting the laws or setting up new barriers, but sometimes it's also to do with us, the people who eventually get selected to serve in these institutions. How about the National Development Planning Commission? It's independent. It's supposed to have its own programs that will direct government. It's constitutionally backed. And yet, we are not getting the kind of results
because politicians fail to implement the blueprint they give you. It's as simple as that.
Which I agree. So what will insulate this new proposal, assuming you go ahead to enact another law that says that you set up a fiscal council that is independent with the same authority given to the NDPC. So let's address the problems. Otherwise, we will keep setting up structures upon structures and not getting the results. I think I agree. There's a problem. But I don't think the solution is in giving new institutions names and empowerment in laws. We should rather build the capacity of the existing structures that seek to serve the same purpose, and strengthen those who serve in those capacities to help us get results. And I think I agree with Mr.
And then the
Kwame on
e-levy
that.
question.
Yes, the e-levy question. Mr. Thompson of ASEPA, I mean, I'm surprised that you are saying that all fiscal reforms in our country lead to tax increases. I'm very surprised at that conclusion. It's not true, because we are just talking about Fiscal Responsibility Act, which has just recently been passed. We are talking about fiscal councils. We are talking about even cut in our expenditures. Even recently announced fiscal measures all did not lead to increases in taxes, but somehow there were a lot of cuts in the expenditures as well. Obviously, you cannot do any financial planning by only looking at one side. As you seek to cut, you must also seek to increase your revenue measures so that you are able to balance your sheet. That is why sometimes it's inevitable that government will have to introduce a revenue measure like the e-levy. So it's not always that you get a result that once you are seeking a fiscal reform means going to increase taxes. It's just one aspect, which is the revenue measure. But there are several evidence to show that indeed it is not always leading to increases in taxes. I agree also that we can do more in terms of the efficiency level of our fiscals, especially on the expenditure side. We have to do more. And I don't believe it is in names or structures of putting up new institutions. It's about building capacities of existing monitoring and auditing and assurance systems that we already have to be able to do the checks properly. Otherwise, you keep on setting up new institutions and achieving no results. I think we have enough structures and laws in place that if we are able to build capacities of those who go into those offices, we can achieve a lot of results.
Okay. I want to wrap up now. If there's one more contribution in the audience, I'll take it. Other than that, my panelists get 1 minute each. And I want you to use that 1 minute each as we wrap up to just bullet for me what are your key interventions to making the macroeconomic environment an enabler instead of a hammer. All of you have said many things in the course of the conversation, but this is just a minute to bullet summarize your key interventions, something that we can take away for us of a sort. Dr. Mensah, I'll start with you. What will be your bulleted points in a minute? Summing up for me your interventions.
Well, I still maintain the position that I started with, that we need to maintain a stable fiscal environment to encourage investors to come in, whether it's local or international investors. And to do that, we have to improve our economic decision-making and management. We're not suggesting that we should create new institutions, Honorable Minister. We're suggesting that the institutions that are on the ground be reconfigured so that they can have longer terms, they can have autonomous decision-making, they can bind better to the public, especially in the cases like Fiscal Council and National Development Planning Commission. We're asking that they should be given the opportunity to be able to have terms that straddle the government's terms so that they can feel free to talk about what every government in power is doing. I think that we have opportunities to do that, reduce discretion in the system. We have to try and reduce discretion so that we get consistency.
Okay.
Yeah.
Thank you. Dr. Shumisi Bafo, what's your summary of interventions to make the environment an enabler?
Okay, thank you, Evans. I believe that for the environment to support investments, government budgets ought to be put in check. We have all talked extensively about that. When you look at the cost of borrowing by governments on the domestic market, it's too high. You compare Ghana to other economies, the government of Ghana borrows an average of 13% in 2020. It is too high, and that feeds into the cost of credit. So the Bank of Ghana needs to look at that with government. When you look at the spread of exchange rates on the Ghanaian market, it is also way too high. above 12%. So you look at economies like Kenya do 5%, South Africa 2.8%. Ghana's own is too high. Why the policy rate and the Ghana reference rate is not able to bridge the gap between the lending rate is something that I believe Bank of Ghana needs to take a critical look at and see why commercial banks are pricing loans that high. And also when you look at the other environment in terms of infrastructure that supports investment, it is important that we invest in it. It is important that we make our laws not too opaque in terms of our regulations towards land title, ownership, in terms of legal rights, Mr. Pianim mentioned. A lot of them are not too transparent, and those do not foster investment. There's the issue of transparency, government contracts, corruption, all these environment feeding. So it's a bouquet of things, and I believe that we need to work on that to make the environment
an enabler and not a hammer.
Friendly to investment.
Great.
Yes.
Mr. Penny, I started with you. Let me end with you. What bullet for me? I know you said a lot. Just crisply summarize for me in a minute what your key intervention is, and you may please use the microphone for me so we go all hear. In a minute, how would you summarize?
I'll summarize by saying the environment is created by all of us. Looking for autonomous decision-making entities. I mean, it just won't work. The Fiscal Council, we're debating, how does the Fiscal Council work? Do you come in before the budget is made? The biggest institution with the clout, the power, the analytical skills is in the Ministry of Finance. Are you going to create another Ministry of Finance? Or the Fiscal Council comes out before the budget is going to be read and goes to advise the Minister for Finance? These are the issues you should be looking at. Or wait when the opposition is criticizing the budget for them to come to criticize the budget.
Okay. Mr. Penny, so if it's not making it autonomous, what would it be for you? What's the key thing to do now to intervene?
Just something to be there, and as I said, let's give it the power to say, on big ticket items, free senior high school, some of the things we do, districts, creating regions, Minister of Finance does the analysis, their cost benefit, and then they have to take a look at it and give the nihil obstat. Say we have no objection. It is sustainable. It is within the recurrent expenditure frame. And as I said, I like the economics department. Please do a chart for us, a bar chart. Government expenditures, project 7 years. Free senior high school, how it's going, how. And then we as Ghanaians have to decide what we should keep aside. When I was in the Ministry of Finance, when your minister or you allow the Prime Minister to go and promise something, immediately you come, I call the Principal Secretary, which of your projects do you want us to cut? And we'll cut it. You know, so to me, where we are now, our emphasis should be cost cutting.
Okay.
Expenditures. We create institutions. We call it what? Value for money, audit, sitting in parliament. We don't need that.
Okay. Mr. Pianim,
let me just end by saying,
30 seconds. Yes.
A second by saying that all of us as Ghanaians have to put our shoulders to the wheel to make sure we create an environment that is conducive. When we wake up in the morning, let's say, what can I do for the business community to prosper? If you're a policeman, what are you going to do? Not arrest people, but what are you going to do to make the businessman's life less complicated?
Ladies and gentlemen, thank you very much. A round of applause for my panelists there. And the voice you just heard started us off and has ended us is Mr. Kwame Pianim, who is an economist. A big round of applause for him for me. You also heard Dr. Chumesi, Dr. Priscilla Chumesi Bafo, an economist with the University of Ghana. Please give her a round of applause for me. Dr. Sam Mensah is the founder and executive chairman of Send Group. Please a round of applause for him too for me. And of course, we had the Dr. John Kuma, who is a member of parliament and also the deputy finance minister. A big round of applause for him too as well. Oh, okay, the parliament, of course, he's a member of parliament indeed. In your constituency. Okay, great. So he's your constituent. He's your godfather. Okay. I want to say a big thank you to GIZ. GIZ made this possible. A round of applause for GIZ for me, please. And they've partnered IMANI to bring us this dialogue series, and this has been a very fascinating one. IMANI, thank you very much for this partnership also. IMANI, Franklin, Bentel, Josephine, all those hardworking ladies and gentlemen at IMANI who made this possible. Grateful. And to the technical team who brought this live on the Joy News channel, and we've been streaming on myjoyonline.com and all other platforms also. Thank you all for joining us. Enjoy the rest of your evening.